It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I am your host. I'm also one of the certified financial planners on the program. With me in the KFG studios, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
So what's the best way to protect yourself from identity thievery? Do you buy the insurance, or is that not necessary? We're going to hit that and much more in this episode.
I think Kevin's a victim of actual identity theft here. Right. He looks like him, but what was that? Hey, if you have a question for the show, we'd love to hear from you. You can reach us a few different ways. Call or text 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com. You can engage with us right there and submit a question. And then all over social media, wherever you're at, we are there as well. Just search The Wise Money Show and follow us there. Submit questions that way as well. All right. So I had a situation a couple of years ago where some folks came in and said, yeah, we also want to talk to you about the identity theft. I'm like, what are you talking about? You know, I thought this was general. We get this question a lot. Or I had someone this week tell me they had a fraudulent charge on their credit card and they're getting a new credit card. So that's why I'm writing a check for my tax prep, that sort of thing. Okay, this wasn't that. I'm like, okay, what happened? He said, well, I got a call from the bank, the credit union, local credit union, saying, hey, you missed your mortgage payment. You want me to just pull it out of your account? Number one, I thought, well, that's nice of them. Which bank calls and tells you missed your mortgage payment? But apparently it happened. And he said, what are you talking about? I don't have a mortgage. And he says, yeah, you do. Don't you remember when you called me last month and took out a line of credit? True story, guys. True story. And he says, that was not me. And he says, what are you talking about? You took out a line of credit for $130,000.
Oh, my goodness.
It's sitting in your checking account. You just must not have used it yet. And this individual said, you've got to be kidding me. Pulled up his bank account, and he was right. There was $130,000 extra sitting in his checking account, and he had a loan for $130,000 that he did not take out.
Wow.
These fraudsters found a way to get the loan and transfer the money to the checking, and they had been spending their time trying to figure out how to get it out of the checking account. And thankfully, by happen chance, because banks don't just call you anymore and say, hey, Sam, you missed your payment. That doesn't happen. Crazy that they did, and it protected this individual. Identity theft is real.
Yeah.
That is the most alarming story I've seen. We're going to share a few others of real circumstances. So what do? Do you go full panic and freeze your credit report like some crazy people would tell you? I'm just kidding. I'm just kidding. When you take that step, when you take the step of freezing your credit, what should you do to protect yourself and manage from this risk? I would start, and there was a little debate. That was the joke. There's a little debate before we started recording. How do you eat this elephant?
You start by freezing your credit.
By freezing your credit. That applies to everyone. You've got a 6-year-old freezer credit. No, it's what would we recommend as a baseline recommendation? Listen, for everyone, because while freezing your credit is appropriate for many of you, I don't think it's appropriate for everyone. Particularly if you're still using credit. Can't really do that. So what's the baseline recommendation we would tell everyone? The very first thing is, I would say, password management. You got to change your passwords to your bank accounts, your online banking. I do it every 3 months. I do.
Yeah, and I think I love cool technology that works, and the best technology that I've seen, and I'm sure there's others out there that actually work, but the best technology, my favorite, is LastPass. Because LastPass, you just need one password to remember to get into LastPass. Then you've got a vault in there that has all of your passwords for anything that you do, which to me, I think that is far superior to letting Google, because whenever you put in a user ID and password, Google,
they offer, right?
If you're
to
on
remember.
Chrome, Google will now say, hey, do you want us to remember that for you? And I just, if you've seen people be deplatformed or depersoned or whatever, you don't want to be the person that happens to.
The other thing I was going to say, and what you're talking about, that password management system has a multi-factor entry, a 2-factor or a 3-factor to get in. And so that's what I would do. I'd encourage you to change your passwords, get in a routine of doing that to your bank accounts and financial institutions, and then I would turn on 2-factor or multi-factor whenever possible.
Yeah, I mean, these tools, if you're not familiar with them, not only do they just keep track of what your passwords are, but they'll help generate passwords that are far more complicated than anything you would be able to remember or even dream up at times. And it just adds a level of security, but certainly that second factor, or that second method of clearing yourself to get in, I think is pretty important. And I'm considering putting that on my phone and other things at home too, because my kids know how to get into like everything.
Yeah, watch out.
We apparently are not very robust in our password setting.
Wait, put what on your phone?
I'm saying not just the phone, the computer and things like that.
Oh, gotcha.
So the next thing that I would tell you, we would tell you, encourage you practically, is check your credit report regularly. Your credit report regularly. There is a website that one of us will share in just here in a second. I'm not talking about your score. The score is a manifestation of the credit report, and you can get your score on your credit card for free most days. Don't pay the $8 or whatever to get your score. Get your free credit report at least once a year and go through it and just make sure it's all accurate.
Yeah, in this day and age, it would be easy to have a false sense of security. Like there's just always somebody watching over your shoulder. I don't know if you guys have experienced this, but every once in a while, I'll get a call from our credit card company saying, we have a suspicious transaction. We need you to approve it. And if you don't approve it, then they're just going to close off the credit card because they don't know if it's been compromised, lost, stolen, whatever. And sometimes we've even had to get new credit cards issued for us. But that's the credit card company, being very vigilant and saying, hey, you don't normally make a purchase in Timbuktu, right? Mm-hmm. And so they think, hey, this doesn't match your pattern. Let's flag this. But what about flagging the opening of credit cards, right? That's really only on you unless you hire an outside service to be monitoring that for you and to flag it and bring it to your attention. You can do this on your own. Each of the credit bureaus allows you to get a free copy of your credit report on an annual basis by going to a website called annualcreditreport.com. And, if you spaced them out evenly every 4 months, you could get a new one from each of the three. But that requires a level of diligence and discipline that most people are just too busy for.
But if you have a common name, you would want to do that.
Sure.
Or if you're a senior and there's a junior, and maybe junior isn't as responsible. I personally have a very uncommon name, and I had a client come in and say, "Hey, are you related to the CFO of Tesla?" And I said, "No." And he's like, "Oh, it's a Korhorn." And I thought, well, that's Korhorn's an unusual name, and there aren't a lot of people that have it. And so they left, and a few weeks later, I was thinking about it. I'm like, I wonder if I am. Like, I reach out to my cousin. It's Zach Kirkhorn. So
must be a cousin then,
right? Yeah. So he's definitely not opening any credit in my name. Let's just put it that way.
So we're joking here, but yes, check your credit report. It's a hard discipline to build a habit around, but we'd encourage that you do it. What else should you be doing? We've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. You're at the Wise Money Show channel. Make sure you hit that subscribe button, turn on notifications. If you like the content, share it. and smash that thumbs up button. What you're watching right now is our weekly 1 hour, on YouTube, full hour, talk show that airs every Saturday right here on this channel at 10 a.m. It's also on podcast at 10 a.m. and it airs live at 9 a.m. on a couple radio stations here in northern Indiana. It's a full hour. I know some people leave a comment, say, get to the point, talk faster. It's like, well, it's an hour radio show, so can't really do anything about that. But leave comments, leave questions. We'd love to help. And then all throughout the week, we have more palatable, shorter, next wise step videos that take a financial concept, apply it to your life that you can take action on. So make sure you hit that subscribe button, turn on notifications, smash that thumbs up button. Thank you. All right. Dang it. Get the notification on your watch. Your wife ran longer than you did today. Jeez. Get back on the treadmill when I get home. You got to beat her.
I don't need a notification to tell me that, actually.
I was all proud of myself this morning. I ran longer. I got terrible joints, but I'm starting to try and lose. I also have terrible belly fat at the moment, so trying to work on that.
So this is why you need to be concerned about your identity. So I actually just looked up Zach Kirkhorn in LinkedIn, and it says, Vistage members have an advantage. Join to get peer-to-peer advice. What's Vistage? Well, this morning I was on the phone with John Marshall, and he was talking to me about Vistage. And I
Siri was listening, or your device.
Everyone's listening to everything.
Wow.
So if you want to have a private conversation, get 2 soup cans and a string. That's the only chance.
This is totally a tangent, but did I tell you the story of when I was on Best Buy's website and the kids were in the room and we were talking and all of a sudden I said something in Spanish, just a Spanish phrase or something, and the website switched to be in Espanol on the device.
Wow.
It freaked me out. I was like, oh my goodness, it's listening.
Yeah.
So
I heard that one time, and the same thing happened, except the website switched to be in Spanish.
Okay.
All right. So speaking of, we're going to
for that.
Let's hit internet risk really quick, and then we'll talk about how do you take it up a notch.
Guard your information.
Anyway, shred your mail, whatever. Let's not spend time on that. Let's take it up a notch.
Let's go up a notch.
All right. Do you need to freeze your credit? Should everyone do that? How do you do that? Should you buy insurance to protect yourself from identity theft? Is there even such a thing that insurance can protect you from identity theft? We're hitting that right now, helping you with it. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. I am the host. And with me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on the YouTube channel. Go check it out. Go to YouTube. Search the Wise Money Show, subscribe, and follow us there. All right, let's get into it. We're talking about identity theft. Basic stuff that we would recommend everyone do, okay, is manage your passwords, change them regularly, multi-factor, that sort of stuff, and monitor your credit report. Not your credit score, your credit report. And just look and say, I didn't open a Sears card last month or whatever, right? Because they don't exist anymore.
I was gonna say.
But look at your report and just see what's out there and fix anything that's incorrect. Kevin mentioned we see a lot of these where someone else's information's on your report because they've got a similar name as you or related to you. I don't want my relatives impacting my credit score. I'll tell you that. Sorry, brother. Okay, you got to manage your internet risks as well. So this is simple, but don't do banking from cellular data. And that's hard because sometimes you just got to do it. And today it's so convenient, just blah, blah, blah. But do your banking on private Wi-Fi. Right,
your private Wi-Fi. Don't
Wi-Fi.
do it in a coffee shop where it's open or whatever. A lot of people don't give a whole lot of thought to that because, technologically, I couldn't tell you how someone could be nearby, essentially hacking their way into your internet connection or following along. But these things, it exists. It is real. This is not science fiction. And it's just one of the many ways that people can get a hold of your information. And unfortunately, the damage that they can do is pretty substantial.
All right. So for those of you that are thinking, oh, okay, thanks for the preventative speech there, but even an ounce of prevention isn't going to do enough. My data is already out there. So is yours. Everyone else's is. They've already hacked it all. I need to be more aggressive. Well, now we're talking. Now you've got a few options. You could buy some insurance. You could set up alerts with your credit reporting agencies, or you could buy insurance that includes some alerts, or you could go so far as to lock your credit, freeze your credit. Guys, let's talk about those options. When's it appropriate? Is there actually insurance that prevents, that can prevent identity theft? Let's talk about it.
Well, it doesn't prevent. There are services, the most famous, I guess, is LifeLock, and they're one of the most expensive as well out there. But those services mostly are doing the things that you would typically do yourself if you had the time and the motivation to do it. That although there's some things that they can be monitoring that you would never be able to monitor. Is your name showing up out, on the dark web, on certain websites where a lot of this information is passing hands and everything. You don't have a way to go figure that out, right? But some of these huge corporations with great skills and technology being deployed, they can do what you can't do. But it's this feature of how do you fix things when it's discovered that there is a problem. And having some reinforcements, maybe a coach and even some dollars available to you can be a really big thing. But, you mentioned, though, the one thing that LifeLock can't do for you is they can't freeze your credit. And that is a tool in the tool bag, right? It's something that you could do, and it may be something that you would really want to do if you know that you've been compromised, if you know that you've been a victim of credit fraud of some sort, or maybe your kids have. But the real drawback, the con to this is, it makes it impossible for other people to open credit for you, but it also makes it hard for you. If you need to go get a car loan, if you're thinking about refinancing or buying a new house or something, you can't do that while your credit freeze is on. You have to take it off, and you've got some hoops to jump through.
I don't understand.
You can't be at the mall and checking out at Hudson's and and say, hey, I can save 20% if I open a credit card today because your credit's frozen.
And sometimes you get that insurance, that home and auto insurance bill in the mail, and it all of a sudden went up, and they said, yeah, your auto insurance rate is actually connected to your credit in a way, not a direct way, but in a way. And by not having that credit available for your insurance company to pull from, that can change your rates. Guys, is there really something man-made, human-made on Mars roving around right now? If that's true, why can't they make your credit where you can turn it on, turn it off, allow access? Like if you can get an alert from your credit card company that, hey, someone just bought something in Alabama. You want to approve this? Are you in Alabama? Why can't I get an alert from Experian saying someone's trying to open a credit card? Is that you? Why can't I do that?
That's a good question. I mean, do they have an economic incentive to create
No, they
that
don't.
for you,
That's
right?
the point. But give me a break. I mean,
So
they should be able to.
So
You should have this is my thing.
Okay.
You should have a manual gate on your credit that you can be alerted on something and let something pass through, and everything else gets blocked out.
Yeah, when I think about that, I think simplify your financial life so that you can. There are pinch points in your financial life. I would rather manually do it than have it automatically done for me. When my credit is automatically frozen, there's some protection in that, but there's also in life is a game of trade-offs. So what's the trade-off? The trade-off is if my credit is frozen, it is much more difficult to be an operator. And you might say, well, listen, I'm not an operator. I've been able to simplify my financial life. I don't need to open that credit card or that whatever, fill in the blank. I'm not applying for a mortgage. I don't. So if your life is simple, frozen credit might not be a bad idea.
Absolutely.
But I do think a complicated financial life where there are too many places to look, that's why if you're working with a financial planner, one of the things that you'd want them to do is help you aggregate your entire financial life in one place so you can see it 24/7, 365, and your financial life is always decisionable, but you will also see if something is raising a red flag.
The insurance, a lot of banks and credit cards have sort of built-in insurance, and I'm probably not supposed to say that because it's not really insurance, but it's built-in fraud protection, built-in, I guess I don't really know what to say, but I mean, if someone spends money on your credit card, charges something fraudulently, then you're not responsible, I guess is what I'm stammering to say. And in that sense, that's why when you're buying something online, which is all the time now, use a credit card. Don't use debit. So that's what I would do.
Aren't there limitations on that too, though? Like you have to catch it and raise the awareness within a certain number of days.
I think most credit card companies are vying for your business, so they're trying to catch it. But yeah,
you're right,
yeah.
For sure.
So anyway, but the
that's a good
insurance
habit to be in. I mean, some people, if you have credit card transactions that are hitting your card automatically, and then you're automatically paying that off, you could go months without actually putting eyeballs on a credit card statement and actually monitoring this stuff yourself.
I want to pick back up the idea of getting the insurance, but then the other thing, guys, one of the most burdened systems with theft is the IRS. We're going to talk about that and more coming up on the Wise Money Show with Korhorn Financial Group.
Yes. Talking about theft and the IRS.
There you go.
It's like cookies and milk.
All right. You want a non-financial hack here? I haven't tried it yet. Speaking of cookies and milk. Okay. So get yourself like a good old 4-finger coffee mug, like one of the big ones. Okay.
3.
Yeah.
Okay. So you're almost there.
Yeah.
Take as many Oreo cookies as you can fit. Stick it in that coffee mug. Take some milk and pour, and there's not a specific science to this, but pour some milk in there, not all the way up, maybe about halfway or whatever, and then put it in the microwave for how long? Is it 2 minutes?
Yeah, I think it depends on how much is in there, but
Presto, cake, Oreo cake. I'm not kidding.
It turns into cake?
Yes. You take it out and you got to mix it around just a touch, but it is like fluffy cake, Oreo cake. Have not tried it, but I've heard
that's what
about it.
happens to just a regular Oreo when you eat it too. It just expands in your. I'm just curious though.
So
I don't think I've ever heard you say the word milk, and it sounds a little bit like you're saying milk.
That is how I say it, Josh. You're bringing up these bullies.
I'm learning something new about you right now. This is fantastic.
You're bringing something up where I was bullied when I was younger, or or you could call them friends. I would call them bullies. That used to tease me about how I would say milk and Detroit.
Detroit, yes.
So those two.
So are you going to go home and tell Cindy that we were bullying you today?
My quote-unquote friend bullies used to tease me about that. No, they're friends.
So back to, you got to finish that. The Oreo cake.
Yeah.
That segment of the show brought to you by Eli Lilly.
Yeah.
Who also makes insulin.
That's right.
For those of you who are on your way to type 2 diabetes.
I haven't tried it because I told you earlier I'm dealing with this stubborn belly issue. So when I try it, I'll give you
that stubborn belly issue will get more stubborn the more Oreo cake you eat.
I thought you were going to say the older I get. I think that's the... I'm dealing with gravity here.
I'm blaming mine on age. I'm blaming mine on age and gravity.
Yeah. All right. So
Your metabolism is found in your hair follicles.
Yes.
Did you know that?
Oh, really?
Yeah, I'm losing hair and metabolism at the same
Oh, my
rate.
goodness. That's the most depressing thing I've heard in a long time.
Well, my metabolism is graying at the moment.
I thought you were serious somehow it's connected. Dude, the world of coronavirus, in the world where you can get a virus and lose your taste and smell, I'll believe just
Anything's
about
believable.
anything.
My favorite thing, because as you know, when clients come in, they like to talk about their health stuff, and my favorite one is when they want to talk about their colonoscopies and stuff. I'm like, but did you guys see that text I sent you about visiting China? So anyway, so my favorite thing to do, because I have a sense of humor that's funny, not funny, is when clients are saying, so, I've gotten both vaccines, or I've gotten the first one, I'm going to get the second one. And I will look at them very seriously and just kind of turn my head a little bit and say, so did you guys get the one where the implant, the microchip with it too? And they, for a moment, they think I'm serious. And they're like, what is wrong with him?
What YouTube channels are you hanging out on?
Yeah. All right. So, anything else on insurance? We'll say that, and then we can get into the tax stuff. And anyway, there's a Wise Money video out there about this, so I can talk about it. And anyway, so all right. How do you help protect yourself against tax fraud? That's identity theft. That how do you protect yourself from someone stealing your refund or creating a tax return in your name and trying to get some goodies from the government? We're talking about that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. Here with me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at, we're there as well. Search the Wise Money Show and follow our content there. Okay, so before we get into tax scams and how to help prevent, anything else on the insurance? Do you just unilaterally recommend it? Do you unilaterally not recommend it? Is it case-by-case basis? I would say case-by-case basis, personally. And if you've been, so my Cindy Bernard, there's another Cindy Bernard apparently in Hawaii that is not very financially responsible. Let's just say that. And we've had these flashes of, oh my goodness, that this is either intentional or not, and we need to protect ourselves. Like, hide your kids, we got to protect ourselves. And we've taken steps directly with the reporting agencies, but we haven't yet gotten the insurance, just because I feel fairly comfortable with the protection that these credit cards offer. But depending on your situation, if you've been a victim, it might make sense for you to get the insurance. Anything else you guys would add there?
Well, I'd go back to one of the things Kevin said in the last segment. I think it was, it has to do with, well, how simplified do you have your financial life? And, certainly your kids, they have a pretty simple financial life right now, but it's going to get more complicated as time goes on. It might get very complicated when they become adults and start their own families. And so I personally think that there's probably not just a universal statement that you would make for everybody. It depends on what phase of life you're in and, what kind of situation you've built for yourself in your financial life. And so in that way, I do kind of think of this as a financial planning question. It depends on your situation and what risk you're facing. And I think personally it's something that you should evaluate with you and your spouse together, but also maybe with your trusted advisor.
Yeah.
What is their perspective? What risks are they seeing for you, and what are the potential solutions that they would recommend?
Tax fraud, tax identity theft is a whole nother animal.
Yeah.
It really is. And I'll just a quick story here. This has become more and more of a thing over the past decade. And I had a situation. One of the very first folks that I dealt with for tax identity theft was my parents. We went and filed an e-file for them, and it was rejected because someone already did in their name.
Already filed a return in their name.
Yep.
To get their refund, essentially.
To get a made-up refund.
Yeah.
But here's what it did. It prevented them from getting their refund.
Yeah.
And so I'm going to give you some takeaways, some action items to help protect that. But before we get into some of those things, there's 3 ground rules we've got to just make perfectly clear when it comes to the IRS. They will never contact you by email. Okay? So that's fraud right there that you could be exposed to if you receive a threatening, very alarming and scary email from the IRS saying you owe us money, that you've got a problem. No. They're not going to email you. They're not. Okay? As of right now, maybe an IRS agent that you've talked to, you've given them your email address. They're not using email at all. Okay. Second, the IRS is not going to make first contact with you by phone. And this, I think, is even more common than the scary emails. It's the scary phone calls because they're very aggressive. They're very aggressive and they sound real. They give you a phone number, blah, blah, blah. And they're going to tell you, you owe all this money in taxes. Let's take care of this right now. If you don't take care of this right now, all these bad things are going to happen. I need a credit card number from you right now. The IRS is not going to make first contact with you by phone. They will not. That's the ground rule number 2. Ground rule number 3 is, well, then how will they contact you? And they will make first contact by letter. They'll send you a little love note or something called an IRS notice. And they're going to tell you, this is the return you filed. Here's the way we would file it. And here's the difference. Explain. And they're going to want your explanation. They're going to tell you to send them an email. No, they're not. They're going to tell you, old-fashioned, create a letter and send it in. And that's where you're going to want to have a CFP, a CPA and CFP, hopefully, that's helped you. Where you can say, okay, I got this. Is this right? Is it wrong? Guys, half the time these IRS notices come in, they're wrong.
See, I say it's way more than half the time. In fact, the fraud where someone's calling you by phone and saying, you must deal with this right now. I'll take your credit card information. Let's get this handled. That's kind of the feel when you get one of these letters as well. It's telling you that you did something wrong on your taxes or our numbers don't match and you owe this money, right? And it doesn't necessarily mean that you owe that money. In fact, most of the time, I would say, vast majority of the time, it's some sort of a mistake. It's a letter that is not being generated by a human being. It's generated by a computer. And maybe there's just some clarification that is needed. But
here's the thing: if you filed on torpedo tax or you did something, free with a cube or whatever, you're not going to get help. You're going to be stuck there, and we clean up a lot of those.
Right.
So work with your CPA, and hopefully they're connected to your CFP. And when you get that love letter, you can bring it to them and say, hey, what's this mean? And if there is something that was missed, it's likely because they didn't mail you that tax form. It came by email, or you're supposed to go fetch it, or there was some sort of miscommunication. All right. So those are kind of the 3 best practices, 3 rules. They're never going to email you. They're not going to make first contact by phone. They're going to make first contact by mail. Now, let's get into these tax-related scams. The very first one is the one that I dealt with my parents, and that was someone files a fake tax return using your Social Security number. Well, how'd they get it? There's a place on the IRS website where you can go and they'll show you the steps on what you then are supposed to do, okay, if that happens. But here are the takeaways. This is the takeaway that we did with my folks, and it turns out, as I kind of searched the Google, these are the takeaways that a lot of people have applied. File early. File early. Don't give the fraudsters much of a chance to go file a return in your name. Second, don't bank on this huge refund. Yeah. My dad said it's the last time we'll ever get a refund. I'm not going to have the IRS hold my money hostage because some fraudster, cut me off.
Yep.
And so we shoot to break even every year, owe a little bit every single year. Mm-hmm. And then third, you can get a PIN, or you can take one extra step to try to protect someone from filing a return in your Social Security number. But listen, guys, sometimes this happens because you've got a blended family and, your ex claim the child, right? Or the stinking child went out and filed their own return. Sometimes
off
this
at
happens
college or
innocently.
something, they filed before you could claim them. Yeah, it can put a roadblock in your way of being able to file on time or to get refunds on time. It's a big deal. Another example of potential fraud related to taxes in a way, especially over the past year, is unemployment income filing, like fraudulent unemployment. So someone basically files for unemployment in your name. You don't know anything about it. Maybe you weren't even unemployed yourself, but they're trying to collect a check as if you are. And unfortunately, many people, you wouldn't find that out until a tax notice comes in the mail saying, okay, you've got to report this income now on your tax return. And you're like, well, hang on a second here. What is this?
Yeah.
There are actually procedures in place that you would have to go through with your state to get this waived, and it can hold up a tax filing process.
That's right. That's right. All right, we've got questions from fans of the show. That and more coming up on the Wise Money Show with Korhorn Financial Group. So,
I totally thought we were in the fourth segment.
I feel like, did you as well?
Mm-hmm.
I thought we were going 13 there.
Here's the alarming thing about that. You have to, when you file for unemployment, the unemployment office sends a notice to your employer. So how valuable of an employee are you that your employer gets a notice saying so-and-so's filed a claim for unemployment, and your employer is like, yeah, that sounds right. Approve. Even though you're still on the payroll. Yeah, we were going to get rid of John. Glad someone finally did. No, I'm joking, but I think that has all come about because now you get unemployment even if you're not employed with someone. They're doing it for freelancers and all that sort of stuff. So funny. Okay.
So here's an interesting, and this is, I kind of got sucked into this in the last segment, but a ghost tax preparer. So if I'm willing to prepare your return, but I won't sign it for you, that you should be concerned about that because they have a P10, which is a tax preparer identification number. So a lot of the folks that prepare returns but won't sign them get paid based on the size of the return or the refund. So if I'm trying to get paid based on the size of the refund, what would stop me from claiming something that you shouldn't or couldn't claim?
Yeah.
So anyway, I would just say be careful. I mean, you would never think of this stuff if you were.
I can't believe you can actually have a payment arrangement like that. How is that not regulated?
Well, if I say to you,
Maybe
Josh,
maybe it is.
no, I have. If I have TurboTax on my computer, I say, Josh, I'll do your return for you, and I'll charge you 10% of your refund. All right. Well, Josh, look, you got a $10,000 refund.
Sweet.
Isn't this amazing?
Yeah. All right. Let's get into it. Questions from fans of the show.
Okay.
You pick which ones we're going to do?
At least the first two. I like, and I'm going to change the refinance question just slightly because it's a little dated. So,
Yeah, the
very dated.
yeah the refinance is now above
Where it was in July.
3. Shoo, baby.
All right, here we go. Can anyone make a contribution to an HSA? What are there income limits? What are the eligibility requirements to get this pretty cool tax advantage, the HSA? We got that and other questions from the show we're hitting right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on the YouTube channel. Go check it out. Go to YouTube, search Wise Money Show, and follow it. Okay, we're going to transition away from the headliner topic of identity theft. If you've missed anything, go check it out on YouTube. But got some questions from fans of the show here. This one was on the YouTube a few weeks ago. Is there an income limit that affects how much I can contribute to an HSA if I'm a high wage earner?
That's a great question, and I would like to start by just defining what an HSA is. So it's a health savings account, and a lot of times when we're talking to clients and we say, well, what type of health coverage do you have? They say, well, I have an HSA. So that's a common misconception because if
Don't correct them. Please tell me. That's like the
Correcting a client when they call it an IRA.
me and him.
Listen, I have a client. I have a client that yesterday, in the spirit of talking about corrections, I drew 3 buckets up on my board, and this client is an artist. And he came around,
fixed your
and
drawing?
fixed my buckets. So yeah, I do. Well, I think it's important. I personally think it's important to understand and have a framework that no, you don't have an HSA. Yes, you do have an HSA, but you don't. So you have a high deductible health plan, and people say, "Well, yeah, of course I do. I've my deductible's $1,000." No. It's not. I feel like my deductible's high, therefore it's a high deductible health plan.
It's higher than I want it to be.
Right. That's right.
So
That's right.
I qualify.
So there are actual guidelines that determine whether or not your health plan is a high deductible health plan. So if you have a high deductible health plan that is HSA eligible, then you can put money into an HSA, again, a health savings account.
Yeah. So basically, if you have a qualifying high deductible health plan that qualifies you to open a health savings account, you're allowed to. You're not forced to.
Yeah.
And that allowance, you can open a bank account, okay, and put money into it. When you do, it's pre-tax. That money you put in saves you federal and state taxes, and if you save it right out of your paycheck, it saves you FICA taxes. And then when you use that money on qualified medical expenses, it comes out tax-free. And I know I'm missing an important part there, but fill it in.
Well, no, but so there are 2 ways to get money into it. One is through payroll deduction, and again, you save federal, state, and FICA Medicare taxes on that. The other way, and we've been doing a lot of this during tax season, is, hey, listen, you partially funded some of it through your payroll, but you haven't fully funded it. You can write a check for the balance of that to fully fund it for last year. And so think 2 ways to get it in. One is via payroll deduction. The other is I can write a check to my HSA and put the money in there.
Use after-tax money and put it in, and then it becomes pre-tax. You deduct it on your return.
Yeah, and if you happen to have an employer who is also contributing to the account for you, first of all, what a wonderful blessing that is. But that eats into your maximum contribution. It's your contribution.
It counts towards it.
That's right. It's your contribution and your employer's together is what we're measuring. But one of the reasons that we love the HSA so much as a tax write-off is the timing flexibility of it. You know, here we are in March. You could still be contributing to an HSA for last year if you need to do some last-minute tax planning. But also, you could have super high income, right? You're not limited like you are on certain other tax write-offs, like contributing to an IRA or something like that.
Yeah.
So the availability to so many people who do have the right type of health insurance plan in place is pretty awesome.
So, great question. The answer is it's only a matter of time. It's only a matter of time. Right now, there is no income limit. As long as you have a qualifying, high deductible health plan, you can contribute to that sucker for now. I'm not being doom and gloom. I'm just telling you. I don't know. Were the income limits always there for the IRA? Someone should look that up.
Yes.
When
It
not
was
Roth, but the IRA.
The traditional IRA?
Yes.
Oh, okay.
I think so, yeah.
And it used to be $2,000 for
Right,
those of us oldsters. We remember
before Bush.
You're getting rich $2,000 at a crack.
The other reason why we love the HSA, like Josh said, is it allows. I mean, I said you can open a bank account, and I was intentionally sort of leaving off some of the details. You could actually open up an investment account. And you can put this money in. It's going to give you the same tax benefits. And if you're not going to use it, if it's quote-unquote long-term money because you've got other savings or you're pretty stinking healthy or you've got lots of cash flow, then let that money sit in there and invest it for the long term. And then you've got, if you put 5 in there and it grows to 15, now you've got 15,000 that you can use tax-free for medical expenses in the future. Pretty great deal. I see more and more people using the HSA as an advanced retirement funding vehicle simply because of its very unique and beneficial tax features. So, great question. Second question comes, and this is a little bit dated, so I got to tweak it a little bit. This was from the beginning of the year, and whoa, have things changed. Would it be wiser for me to refinance my mortgage now, dropping from 4.25% to 3%, or just wait, knowing that I'm going to build a house in the next 5 years and we'll have to restructure my loan then? And then there's an add-on there. But let's just stop right there for right now. Interest rates have gone up significantly as the market is expecting inflation and the Fed is saying, no, there won't be any. And so interest rates and mortgage rates have gone up very quickly. So if someone hasn't refinanced yet, do you tell them, quickly jump in? Or do you say, well, wait because rates will go back down, or wait because you missed your opportunity? What do you think?
Boy, I try not to make predictions on what direction interest rates are going to go because, for the first 15 years of my career, I was just wrong all the time, right?
Me too.
They can't possibly go any lower than this.
Right.
Oh, okay, yes, they did. But so here's the thing. You have to just look at the situation in front of you right now, and with the facts in front of you and your assumptions about the future, make a wise choice. And anybody who's refinancing needs to stop and recognize that, generally speaking, there are closing costs, sometimes significant closing costs, to get that new loan in place. Most people roll those closing costs just into the new loan, so it doesn't take money out of their bank account to achieve it. But either way, when you're incurring this new cost, you might be taking a step backwards on your mortgage by rolling the closing costs in, or you may be, draining your bank account to cover them. And in either situation, you need to know, will I have this loan in place long enough to recoup those costs? There is a break-even point at some point. And if that's 9-10 years out based on the calculation, and you think you're not going to be in the house for much longer, then I would pause and question whether or not that's a good use of the money. Just getting a lower interest rate isn't the point. The point is having less interest bleed out of your financial life into a lender's hands instead of staying in yours. We want to reduce that as much as possible, and not just jump on a lower interest rate just because you think you should.
Yeah, that could be the reason why, is to reduce the interest that you pay over time. Another reason could be I'm adjusting cash flow. I'm doing a cash out refi, paying some things off. You want to look at what are the closing costs, because it can be very confusing. I think in terms of around $3,000. And I was working with a client the other day, and she said, "Hey, okay, does this look okay?" I said, "It looks great. Your closing costs are around $2,800, and this was I don't know, this was a while ago, but she got 2.5% for 30 years. Pretty amazing deal."
Yeah.
So she wrote back and said, "No, this is confusing because it says my closing costs are $8,500." And I said, "Well, so you got to peel back that onion a little bit. The costs that the company are charging you to actually perform the service of the refinance are about $3,000. The other costs are the prepayment of your property taxes, the prepayment of your home insurance, and these other things. So they want $8,500 to get everything the way that it needs to be, but the cost itself are $3,000.
So those prepayments are basically pre-building your escrow account, because you might have some payments due for taxes or for insurance just right around the corner, and you don't have 12 months to slowly trickle money into that account.
And you'll likely get back, if you're refinancing with a completely different company, you'll get back whatever was in your escrow account at the previous company.
That's right.
It's a financial planning question, because you've got to look at your entire financial situation, your priorities, your cash flow, your goals, how much you're funding other areas, the rest of your debt, and see what makes sense. Typically, it's the 5-in-1 If you're able to reduce your interest rate by 1% and you're still going to have that mortgage in 5 years, I would consider doing it. But that goes back to, that's a quick and easy way of doing that break even that Josh mentioned. That now the 5-year rule, are you going to have that mortgage for 5 years? Well, you could move, or you could pay it off, or you think rates are going to keep going down. Who knows? And the individual wrote in and actually said, I'm actually going to be building a house. Would it be wiser to just start building the house now so that I lock in the low rates, or wait until higher? Now, that's completely separate than the mortgage, in my opinion, even though he's asking about rates, because this is a question about your financial readiness and the rest of your financial plan, because building the house accelerates some costs. Well, were those resources supposed to go somewhere else, and now they've got to be sucked into the mortgage? You don't want to do something where it's cheaper to do the bill, get the interest rate, but it's more expensive because of the lumber, or it's more expensive because I have to reduce my savings to retirement, something like that. So you've got to make this decision in the context of your entire financial situation.
I agree. And, some of the most difficult or sad financial situations that I've ever gotten to get a glimpse into are situations where people made certain assumptions about, hey, I can still maintain my mortgage on this house and buy this second house, and after we sell the one, then everything's going to be great. And something changes in the economy around them, and their assumptions about the future are proven to be false, and the pain and the stress can be too much sometimes.
Too much. Yep. All right. Thanks for the questions. I hope that has helped you. That is all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, myself, and all of us at KFG, have a great weekend. We'll see you next Saturday for Wise Money with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management, LLC. Doing business as Korhorn Financial Group. KFG Wealth Management, LLC and Silver Oak Securities Incorporated companies are unaffiliated.